all the members and staff who have worked on this bill over the course of these last several months. It has been a massive group effort, and I am so pleased to have this product before us today. So we are going to do some run-throughs and talk through what has been agreed upon, and so give us a little bit of patience because we did just get everything put together like literally an hour ago, and so if we are missing anything, just a little bit of patience from everyone. So what we're going to do first is we are going to have fiscal staff walk through the bills. So Solveig Beckel from House Fiscal and Krista Boyd from the Senate Fiscal.
Thank you, Madam Chair and members. Solveig Beckel, House Fiscal. The spreadsheet for the working group agreement should be in your packets or available in the materials provided to the public. This is the full spreadsheet showing existing appropriations and changes made in the working group agreement. Ms. Boyd and I are just going to go through the change items in this spreadsheet. The first changes that are visible are on line 3, and as we're going through this, please refer to the columns at the far right on the spreadsheet, the ones that are titled SF 2216 Agreement. This was the bill, the title of the bill before the regular session ended. So on line 3, the total appropriations for the Department of Commerce increased in fiscal years 26 and 27 by $4.782 million, and in fiscal years 28 and 29, $5.46 million. Line 4 of the spreadsheet, appropriations to the Legislative Coordinating Commission, which is not typically part of the purview of this committee, increased in fiscal year 25 by $200,000. Line 5 of the spreadsheet, the Office of Cannabis Management, appropriations to this office decreased by $6.65 million in the fiscal year 26-27 biennium and decreased by $15.894 million in the fiscal year 28-29 biennium. The next section is revenues and savings in the bill, or in the working group agreement, excuse me. Line 7 shows the investment advisor and broker-dealer examiner's fee revenue. This is from a new proposal on the Department of Commerce, on the Commerce Department's behalf, that will increase investment advisor and broker dealers, but also bring in revenue to pay for those new oversight for investment advisors and broker dealers. So that has revenue of $1.086 million in the first biennium and $1.086 million in the second biennium. Line 9 is the next change. This is the cannabis licensing fee. This was in Chapter 31, but because that was entirely policy, the fiscal change from that, the revenue from the new license type, is being captured in this bill. So that has revenues of $246,000 in fiscal years 26 and 27, and revenues of $480,000 in fiscal years 28 and 29. Moving down, within the Department of Commerce, I already talked about the overall change, but within the financial institutions part of Commerce, the next change is on line 22. So this is the securities unit staffing for the investment advisor, broker dealer examiners. And that is, as you can see, equal to the revenue on line 7. So this is just the staffing for that piece. So that is $1.086 million in both biennia. On to line 2, or page 2. On line 34, the Department of Commerce receives an operating adjustment of $3.002 million in the first biennium and $3.680 in the second biennium. Moving down to the enforcement and market assurance section. On line 58 is the Common Interest Community, or HOA, Ombudsperson. This has an appropriation of $694,000 in fiscal year fiscal years 26 and 27, and the same amount in fiscal years 28 and 29. Moving on to page 3. The telecommunications section is unchanged from prior law and statute. The next change is under the insurance section of Commerce. On line 84 is a small insurance operating reduction. So the insurance operating is reduced by $20,000 each year, so that as you look down on line 92, the National Council of Insurance legislators can receive that $20,000 per year. So it's a net change of 0 for those 2 items. And then I will pass the spreadsheet over to Ms. Boyd.
Thank you, Madam Chair. I'll start on the top of page 4. This is the reinsurance section under the Department of Commerce. There are 5 change items of relevance here. I'm actually going to jump around a little bit to try to tell a story. We're going to, lines 109 through 112 show a transfer out of the Healthcare Access Fund and into the Premium Security Plan account, the Special Revenue Fund, of $145 million one time in fiscal year 26. And that will go toward funding reinsurance payments for plan year 26, which is actually fiscal year 27. That transfer will be combined with money existing in the Premium Security Plan account and federal pass-through money, which is on line 114. About $99.8 million in federal pass-through revenue will be recognized in fiscal year 27 and 28 as a result of funding reinsurance with state money. So the $145 million transfer from the Healthcare Access Fund combined with the federal pass-through money and the balance in the account will combine to fund plan year 2026 under the current federal waiver. Those reinsurance payments for plan year 26 are on line 108, estimated to be $335.6 million in fiscal year 27. And then for plan year 27, there will be assessments on group health carriers, and that assessment revenue is shown on line 116. The assessments will happen in and be payable in fiscal year 29, estimated to be $266.833 million. Those assessments combined with federal pass-through revenue of $99.8 shown in fiscal year 28 will combine to fund reinsurance for plan year 27, which is fiscal year 28. That is on line 108. The reinsurance payments estimated to be $375.9 million. There is also off the spreadsheet in fiscal year 30 will be a tax credit allowable for group health carriers, roughly in the amount of the assessments that they were assessed in fiscal year 29. About $266.8 million. That will be funded through a combination of transfers and open appropriations from the general fund, and that is in a footnote at the bottom of the spreadsheet. Moving on to weights and measures. I'm sorry, I want to make one more note that there's an asterisk on line 108 for reinsurance. Those payments also include amounts for transfer to the MNsure account to make MNsure whole as a result of the interactions between reinsurance and MNsure at the federal level. Moving down to weights and measures, line 124 and 126. This is a governor's recommendation that is in the agreement language to allow for inspections of electric vehicle supply equipment. An inspection fee will be assessed on the owners of the charging ports, $100 per inspection per port. That revenue is on line 126, about $188,000 starting in fiscal year 27. $288,000 in 28 and $331,000 in fiscal year 29. That amount is appropriated to the Weights and Measures Division to conduct the inspections. Start on line 130. This is, we're out of the Department of Commerce now. The Legislative Coordinating Commission has a $200,000 one-time appropriation from the general fund on line 130 for administrative costs of the insurance task force. That will be, I'm sure, gone over in the language later in the bill. Turning to page 5, this is the Office of Cannabis Management. Total appropriations are on line 132, all from the general fund of $33.4 million in 26 and $36.35 million in 27. This is a change from base, a reduction of about $6.65 million for the biennium. The change items are starting on line 138. This is operating adjustments for the office of $842,000 in the first biennium and 1.13 in the second biennium, 1.13 million in the second biennium, all from the general fund. On line 140 are reductions to the 15 million base amount each year for the Can Renew grants from the general fund. That reduction is 3.746 million each year in 26 and 27, and 8.5 million each year ongoing starting in 28. Lines 141 and 142 show an extension of the Can Renew grant appropriations in fiscal year 25 of 1 million. I believe those awards have been identified, and this will allow the money time to get out the door in fiscal year 26, and those cancel out. And then finally, on lines 150 and 152, this is statutory appropriation and revenue for provision under the Public Utilities Commission that allows a telephone company or telecoms carrier to petition the PUC for approval to discontinue service in an area where there are other providers available. And so this would be fees assessed to the telecoms companies to fund administration of this discontinuation. This is about $522,000 a biennium into a special revenue fund account.
Thank you, Ms. Boyd and Ms. Beckel. Appreciate the walkthrough. Members, I am just going to give us a couple minutes to actually through each section that we're going over to have any discussion or any questions from anyone before we move on to our next item, which will be walking through the policy agreement. Any questions, members, or any comments? All right, then. Seeing none, then we will move into having council walk us through the policy agreement. And so we have our House Research, Laurie Pompu, and from the Senate Research, Olivia Silverson and Nolan Hodella. I'm not sure who's going to go first. Okay, all right.
Thank you, Madam Chair. My name is Olivia Severson, Senate Nonpartisan Counsel. Article 1 reflects what we just walked through in the spreadsheet, so I'll be starting with Article 2, the Financial Institutions Policy. Section 1 appeared in both the Senate and House bills and corrects a cross-reference. Section 2 appeared in both bills. The language here is specifically from the Senate, and it states that a loan that meets the federal qualified mortgage standards is not subject to the service charge limitations in this section. Section 3 appeared in both bills, but with some technical differences. This is the Senate version and updates the index that is referenced to determine the average prime rate for purposes of real property loans. Section 4 also appeared in both bills. This section allows a lender making a mortgage loan to give notice of default via first-class mail and electronically if agreed to by the borrower. Section 5 appeared in both bills but had slight differences. This is the House version and allows a financial institution, if notice is provided, to close a deposit account if the holder has engaged in harassment towards the financial institution's employees or customers. Section 6 appeared in both bills and corrects a cross-reference. Section 7 appeared in both bills and allows a safe deposit lease to renew automatically at the end of the lease's term. A consumer may terminate a lease at any time in writing or as otherwise provided in the lease. Section 8 appeared in both bills and corrects a cross-reference. Section 9 amends the requirements for the issuance of an additional broker's license and states that a broker must have at least 20% ownership interest in each business entity that the broker may hold a broker's license for, and it amends the definition of affiliated business entity. Section 10 appeared in both bills and makes a technical change. Section 11 appeared in both bills and states that a lender's compliance with Section 47.20 Subdivision 8 is optional with respect to certain loan mortgage documents. And I'll hand off the walkthrough at this point.
Chair and members, Laurie Pompu, House Research. We're looking at Article 3, Insurance. Section 1 deals with homeowners insurance and removes a reference to owner-occupied dwellings less than $500,000 and linking that amount to the Consumer Price Index. Section 2 involves fair plan coverage and requires a disclosure regarding the fair plan. Section 3.
Thank you, Madam Chair. Nolan Hudala, Senate Nonpartisan Counsel for the Commerce Committee. Article 3, Section 3 was a Senate-only position. It makes a technical update to remove an obsolete reference to the Minnesota Comprehensive Health Association from the applicability provision of Section 62A.65. Sections 4 to 8 reflect the agreed-upon position on guaranteed renewability, which generally refers to a health carrier's ability to decline renewal of individual health plans. These sections were primarily based on the House's initial language. That House position has been modified in this bill, however, to exempt grandfathered plans as well as plans with fewer than 25 enrollees from Commissioner of Commerce review of the plan's discontinuation, unless the plan is a catastrophic or platinum level plan, in which event Commissioner review of the discontinuation would still be required. Moving on to sections 9 and 10 of Article 3. Those two sections are a modified version of the Senate's language to update the Department of Commerce's 62J evaluation process. Specifically, Section 9 directs the department to hold available one evaluation spot in even-numbered years for an expedited review of a freshman member's mandated health benefit proposal. And then Section 10 requires the department to adopt certain forms to facilitate the 62J notice and evaluation process. And then Section 11 is a shared House and Senate position. That Section 11 allows the Commissioners of Health and Commerce to contract with more than one organization, as compared to existing law's minimum of 3 organizations, to provide independent external reviews of adverse determinations.
Chair and members, still in Article 3, Section 12 to 17 relate to the facility that operates the Minnesota Fair Plan, and it allows them to issue policies directly instead of moving those policies off to member insurers. On to Section 18, requires an automobile insurer to provide the insured with one copy, at least, of their insurance policy per year. Section 19 clarifies an effective date from 2024. Section 20 is a task force on homeowners and commercial property insurance. This creates a 13-member task force, and as Ms. Beckel referenced, it has a 2025 appropriation to the Legislative Coordinating Commission to help the task forces regarding insurance, and their task is to work on stabilizing and strengthening the homeowners and commercial property insurance industry. They must submit a report to the legislature and other related agencies. And now we're on to Article 4. Article 4 is an NIC Model Act relating to capitation and liquidity requirements for insurance holding company systems. This was in both the House and Senate bills. And then we are on to Article 5, which begins on page 52. Article 5 deals with Medicare supplement insurance. Both the House and Senate had differing proposals for this. Article 5 allows medical underwriting and pre-existing condition limitations to apply if the enrollee is over age 70 or changes more than once from a Medicare Advantage plan to original Medicare / supplemental Medicare. It also applies a tiered penalty beginning for the 2026 open enrollment period that applies 15%. It goes up by 5%, ending in a 35% penalty for that one movement in 2030, and then applies the 35% penalty ongoing from there.
Thank you, Madam Chair. Members, moving on to Article 6, which is wholly dedicated to reinsurance. Specifically, Article 6 funds the state's reinsurance program for plan years 2026 and 2027. 2026 is funded through the Healthcare Access Fund as well as the Premium Security Plan account, and 2027 is funded by an assessment imposed in calendar year 2028 on health carriers that offer group health plans. Those health carriers can then claim a tax credit against their premium taxes beginning in 2029 for assessment costs they incurred in 28. Furthermore, Section 1 of the article gives the Commissioner of Commerce enforcement authority over health carriers that fail to pay the required assessment amounts, and Section 10 requires a transfer to the MNsure account to hold MNsure harmless for lost revenues resulting from the reinsurance program.
Thank you. Now we're moving on to the final article, Article 7, which is Commerce and Consumer Protection Policy. Section 1 is a House-only provision related to gasoline, which updates cross-references to the ASTM specifications. Section 2 establishes a common interest community ombudsperson within the Department of Commerce and appeared in both bills, but with some slight differences. The language here is from the House with the inclusion of data protection language that was originally in the Senate version. Sections 3 to 5 appeared in both the House and Senate bills with slight differences in drafting. The language here is language from the House. These sections relate to data calls and allows the Commissioner of Commerce to issue data calls. Section 6 is a House-only provision which allows the Commissioner of Commerce to increase or decrease the license and technology fee surcharge if the related special revenue fund is too low or too high, but it cannot exceed $2 million. Section 7 is a House-only provision which exempts private fund advisors that pay fees under Section 80A.65 Subdivision 2B from registration under this section. Section 8 appeared in both the House and the Senate bills, but changed the fees to different amounts. The language here is from the House, and that changes the transfer fee for a broker-dealer from $25 to $65 and requires registered investment advisors to pay a $50 transfer fee. Section 9 is a House-only provision that requires a private fund advisor to pay a $100 filing fee when filing an initial or renewal notice under Section 80A.59. Section 10 appeared in both bills and adds reference to the North American Securities Administrators Association and the Commissioner of Commerce. Section 11 appeared in both bills and states that it shall be unlawful for a manufacturer, distributor, or factory branch to require new motor vehicles to refrain from participation in an auto show. Section 12 is a House-only provision which allows a continuing education course provider to submit a form to the Commissioner to receive approval for credit for a synchronous educational offering within 60 days of its occurrence. Section 13 appeared in both bills but contains slightly different requirements for new motor vehicle dealers' participation in auto shows. This language here is the House version. Sections 14 and 15 are Senate-only provisions which state that a retail seller of electricity used to recharge an electric vehicle is not in violation of the exclusive right of a utility to provide retail electric services if the electricity the retailer sells was provided by the utility serving the location of the charging station. Sections 16 and 17 are also Senate-only provisions. They allow a telephone company or a telecommunications carrier to petition the Public Utilities Commission to discontinue services to an area where customers have access to other providers. The PUC is able to assess fees for the cost to administer the discontinuation of telecommunications services. Sections 18 to 22 are House-only provisions. Sections 18 to 21 update cross-references to the ASTM specifications. Section 22 allows a retail gasoline station to have one storage tank for non-oxygenated motorsports racing fuel and requires specific signage. Section 23 is a Senate-only provision that requires the annual inspection of retail electric vehicle supply equipment and requires retail EV SE owners to pay a $100 fee. Sections 24 to 26 are House-only provisions that update cross-references to the ASTM specifications. Sections 27 and 28 are Senate-only provisions which amend the definition of covered products and creates a few exceptions to the prohibitions in the section of law that prohibits lead and cadmium in consumer products. Section 29 is a Senate-only provision that states prohibition against PFAS in firefighting foam does not apply to the manufacture, sale, distribution, or use of Class B firefighting foam until January 1st, 2028. Section 30 appeared in both the House and Senate bills. The language here is a Senate language. This section requires a place of entertainment to either allow attendees to bring water in, provide water, or allow empty water bottles to be filled in the place of entertainment. Section 31 states that termination of an at-will membership that does not have a defined membership term is effective no later than 30 days after the date of notice of termination. And finally, Section 32 is a House-only provision which requires the Commissioner of Commerce to amend rules reflecting the National Association of Securities Dealers is now the Financial Industry Regulatory Authority. It authorizes the Commissioner to use the expedited rulemaking process.
Thank you, Ms. Pompu, Ms. Severson, and Mr. Hadella for the walkthrough. I do just want to flag that there is an item missing here regarding expedited rulemaking relating to electric vehicles. This was part of the agreement, and we will have Council incorporate that provision into the bill language. Council, could you please describe that provision?
Yes. Thank you, Madam Chair. In the original language in Senate File 2216, that section included a subdivision which authorized the Commissioner of Commerce to use the expedited rulemaking process. That was taken out through the process of session, and we'll add that back in.
Thank you, Ms. Severson. So, members, I will like to open this up for any discussion or questions or conversations. Anyone? Chair Klein.
Thank you, Chair Hurd and Chair O'Driscoll. And let me start just by saying, members and the public, this was an exemplary process as we moved into conference together with the chairs. Obviously, a singular and unique circumstance in the legislature this year with the partisan power sharing in the House and a very closely tied Senate. And yet we were able to come to some common sense agreement on what constituted consumer protections for Minnesotans and the need to hold down healthcare costs for Minnesotans. I just want to point out a few of the provisions that I'm really proud we did include in here, and then one that I think we really need to get back to next year. We are going to continue reinsurance, and Minnesota ratepayers will be grateful for the fact that their health insurance rates are stabilized in the coming 2 years, and I'm grateful for the cooperative work on that from the department and from the industry and from both parties in the House. We're going to ensure that Minnesotans who go to large public events have access to water, which as a physician is particularly important to me and seems like a common sense consumer protection matter, and we had bipartisan agreement on that as well. The HOA Ombudsperson Office will begin the process of sort of figuring out where we are in Minnesota with these 1.2 million Minnesotans who live in HOAs and how they're organized and what their governance structure is, and this is just a baby step in that direction, but it is an important one. The telecom provision from Senator Rasmussen, been worked on for a couple of years, obviously important work to sort of modernize how people access emergency phone services in rural areas as that industry changes. And then our alterations to lead key prohibitions and cadmium prohibitions, I think, were worked out with common sense and the needs of Minnesotans in mind, and will also hold down costs for Minnesotans. The one item that we weren't able to include, which I think is really important for the public health, was the prohibition offered by Senator Duckworth on nitric oxide sales. You know, we all know what we're talking about here. These are the canisters that are sold in retail operations that are used to create an unsafe high, typically among young people. And at the last minute, we realized that the language we had described wasn't specific enough. It would incorporate other products which are used for legitimate cooking purposes, and we took it out. I'd like to work in the interim with the retail industry to see if this requires regulation or if it can be removed from stores simply on the initiative of the industry on their own. But I think we should definitely make sure that these products are kept from the kids in Minnesota. And thank you both chairs for your work together, and I think we've got a good product here.
Thank you, Chair Klein. Co-Chair O'Driscoll.
Madam Chair, before I share my thoughts and comments, I have one question. I just want to make sure we have clarification, and maybe either Senate or House Counsel can help us with this. I'm going to refer to page 102, which is Article 7, Section 27. So page 102, Article 7, Section 27. And I'm going to be on line 102.23. 102.23. We talk about school supplies, and then it says except pens and mechanical pens. And then if we go over to page 103, again, section 7, on here, lines 103.15 through 103.16, it says covered products that may contain only a solder used in the internal components in pen tips if. Wondering if there is some clarification or some conflict here that we might want to put in the language to kind of clear up. I've heard some questions about this, wanted to bring it forward.
Thank you, Chair O'Driscoll. I don't know which staff member would be the best equipped to answer this. Thank you.
Thank you, Madam Chair. So reading the two sections together, Section 27 exempts ink pens and mechanical pencils from the definition of covered products. But then in Section 28, it states that covered products that contain lead only in sold or used in internal components or in pen tips if, and lists out some different factors here. I would we might want to look at the language a little bit closer just to make sure it's covering the intent that we want to achieve here. I know this language changed quite a bit throughout the process. I think we should continue talking about it just to make sure that the final language is what you want it to reflect. I think it works together, but we'll go back and look at it a little bit closer when we can talk it through.
Thank you, Ms. Severson. And I think that we do have a couple of corrections we want to be incorporating, so we should, this will be something that we'll just make a note to continue to make sure the language is worked out. Co-Chair O'Driscoll.
Yeah, Madam Chair, I agree with that. And better to catch it now than when we're sitting around next year going, remember that fix we had to do? Let's just get it right so that we don't have any issues on that. And Madam Chair, if I might, I'd also like to just share some thoughts and comments about the process. And I'm going to go back to when you and I found out that we were going to be co-chairs of the Minnesota House Commerce Committee this year. And you and I have had a very solid working relationship prior to our involvement in the Commerce Committee. That goes back to our days in working on pensions. And I'm very pleased that the Pension Commission was able to get a product that the governor signed last week again. And your work in the Pension Commission the last 2 years prior to that, you were always open, willing to work with me and to get to the right product. And so I was excited when I heard that you were going to be the co-chair. And we had an agreement, and that agreement was we're going to work on stuff that's important to Minnesotans. We're going to work on stuff that has bipartisan support, and we're going to keep moving. And I think that we elevated, I'm a little, territorial, but I think we elevated in the House to a very functional and highly operational committee, and we're able to get a lot of things taken care of. And that worked as well when we joined with the conference committee at that time with Senator Klein and the work that they had done. We never got into yelling contests. We never got into pushing and shoving contests. We always made our decisions based on the facts of what were there and always kept what's important for Minnesotans. Did everybody get everything that they wanted out of here? No, but is it a good product for Minnesota? I agree. I think it is. And I want to underscore Senator Klein's comments about reinsurance, and we do have predictability and stability in the market. The number one thing that I think that this commission, I should say committee, needs to do, both in the House and the Senate, is to provide a predictable and orderly working environment and business environment in the state of Minnesota so that all know what the rules are and they can function accordingly, which again means that there are jobs and means people can afford homes and our state prospers on that. So we have done a I think, a pretty darn good job this year. And so I also want to thank Senator Klein and Co-Chair Herr for their work this year in helping us to get to this final product.
Thank you, Co-Chair O'Driscoll. Any other member comments? I will just reiterate what Co-Chair O'Driscoll already spoke to, is that the cohesion of this group, that truthfully, even before we got into the conference committee portion of it, Senator Klein was always a great partner and had discussion with me throughout the process, and I just want to say thank you for that. I won't repeat what Co-Chair O'Driscoll already said, but I appreciate you as a partner. And I will just thank our staff, because this was, though we all worked really well together, that does not mean that any of the work for the staff was any less because of that. And I think that it actually made for more work because we were collaborating and we were constantly working through language and constantly asking for changes. And we were all working throughout the night, which meant that they were working throughout the night. And so I want to make sure that we lift up both of our CAs, our nonpartisan research, our partisan researchers. Every single person made sure that this process worked. I also want to thank Commissioner Arnold for being a great partner, her and her staff, Sam. And also, I can't remember your exact title, Eric, but interim director of OCM, that this was really a group effort. And considering the makeup of where we are right now in history with our House, that it was really critical that all groups, and it may not have been conventional to have departments at the table to have this discussion, but I think that it made the process go much better. And so I just wanted to thank everyone who was a part of this. I will just make one quick comment around the process that got us here, is that, we all very much agreed through the committee process what we thought was going to work at the end, and that to Co-Chair O'Driscoll's credit, we both agreed we shouldn't be putting up partisan bills, and if we did, we knew there was an issue we might need to hear, but we agreed ahead of time what would be included and what wouldn't. That doesn't mean that everything was fixed in the end, because when we got to the end of the process, things that we still needed to negotiate, guarantee renewability, reinsurance, the Medigap, that those were things that actually no one got their full position that they came into during conference committee, but I think that the compromise positions actually, it forced us to be really creative about what we were putting forward. And so I just want to thank the committee and the members for the creativity that went into this. And I really do feel like when we say compromise, we got to the middle on all of those issues. And I too do greatly appreciate that. I will just say another one quick thing. For me, the Medigap became an issue that I wasn't familiar with before I got here, but I learned quite a bit about it. And I want to thank the industry for being willing to help us figure out what could be a viable solution. I am happy about where we got to, but I do want to point out that we continue to face issues in this particular area. And I think about, as the recent articles that came up around fraud within the Medigap and who is participating, and considering the pressures we're feeling about rising costs of healthcare and premiums and products, that we as the industry members who are here, that we really take a look at that. And I know that for me, one big issue that came up was the selling of which products to whom. And I know that we are trying to fix a situation in which we don't want to have some type of open enrollment year after year after year, because that destabilizes the market. As somebody who comes from business and investment and background, that I understand the importance of stabilizing the market. But I do also know, coming from the investments industry, that we sell the products in which we get the greatest commission. And that was the one thing that no one was willing to say out loud as to why it is that 3-to-1 we have more selling of products in Medicare Advantage versus Medigap. But that is also because we know who is getting paid to do what. And I would encourage that we ourselves look at how we operate and making sure that people get the information that they need and that they're informed consumers. And so that they don't come to us and say, I didn't know, I was sold this product and I didn't realize that it wouldn't cover when I would become really sick. That it is on all of us to ensure that an industry that really provides the products that people need, that they get, so that we don't blame the sickest people for destabilizing a market in which they were never given the information so that they could make a good decision. And so I ask that as industries and as members and partners, that we do take a critical look at ourselves, because I don't want to write legislation to regulate how people do business. But if we do put people first, then we should consider these things as we move forward in our businesses as well. So I thought it was important for me to state that, and I look forward to working with everyone in the next year. And I think I'm going to close with just that. And so if there's no additional member discussions, I will just move to a vote, and we'll just do a voice vote that if we could adopt the Commerce Budget and Policy Agreement. So all those in favor, say aye. Aye. Any opposed? Seeing that there are no nays, the motion prevails. I will also move nonpartisan staff to be authorized to make technical changes to reflect the will of the working group. All those in favor, say aye. Aye. Any opposed? The motion prevails. There is no further business before us, and so we are adjourned. Thank you, everyone.